Good morning, friends. Welcome to the morning podcast with me, Sudeep Shah. In today's podcast, we would be discussing about what to expect in Nifty and Bank Nifty from here on, and along with that, key levels for both the indices. We will also be discussing on key sectors and stocks that we should be focusing on for the day and for the next few sessions. Now, before talking about the indices and stocks, let's see how the two macroeconomic factors are placed. Now, firstly, the dollar index. Now, this dollar index has rebounded back to 106.30 levels, and that is largely due to the US CPI numbers which have been announced yesterday, and they are slightly higher than expected. And this could lead to the US Federal Reserve stick to the higher interest rate scenario for a longer period of time. Now, secondly, the Brent crude oil prices are stable around 85 $86 a barrel, which is positive. Even the Indian IIP numbers as well as the CPI numbers announced yesterday were better than expected, and that too is a positive. Post a positive opening yesterday, we saw Nifty and Bank Nifty both indices trading in a tight range. Nifty traded in a 50 odd points range while Bank Nifty traded in a 120 odd point range for the major part of the day, which is just 0.3% of the index value. Now, the most important trigger is the result season, which has just started. Now, both TCS and Infosys have not been able to deliver results on expected lines, and hence we are seeing the selling pressure in the IT pack, which is leading to the pressure on Nifty from higher levels. Even HDFC Bank numbers, which are due on Monday, would be an important trigger for Bank Nifty. Now, with index expected to open with a negative bias due to selling pressure in IT sector, especially Infosys and TCS, we feel Reliance and ITC could support the Nifty from lower levels, with Reliance now witnessing a rebound from its crucial support zone of 200 DMA, which is around 2300, and even ITC has rebounded from its important support area of 440 445 zone. So both these stocks should be on radar. And even auto names such as Maruti, Bajaj Auto, and Hiromoto could try to support Nifty from falling further. Also, positionally, I feel that a good base is being formed around this 19450 19500 mark, and like in August, we had a range of 19250 to 19500 on the upside. Feel that currently the markets are in a 19450 to 19900 range. So, there might be some intermediate fluctuations, shakeouts due to these result reactions, but the overall texture is positive with quality mid cap names performing, selective large caps also showing good traction, and I feel one should utilize these dips to pick up quality names from a medium term perspective. Now, coming to the index levels for the day, post a gap down opening, I feel that the markets, especially Nifty, could take support around 19580 19600 mark. Until the support zone holds, there could be a recovery attempt up to 19800 19830 on the upside. Major resistance would be around 19850 19900 mark, where there's a gap area created last week, and it's crucial for the index to surpass this zone for an incremental buying to emerge. Also, this zone is the 61.8% Fibonacci retracement of the entire fall from 20,200 to 19,330, which has been witnessed in the last month. Now, having a look at the Nifty option chain, significant put writing is visible in 19,700 and 19,650 strikes, while on the calls front, 19,800 strike prices hold a significant share of open interest built up. So, we feel basis this data, the overall range could be 19,580 on the downside and 19,850 on the upside. Now, coming to Bank Nifty, key support for the Bank Nifty lies at 44,200, 44,250 zone, and it's extremely important that Bank Nifty manages to cross and close above this level of 44,600, where the 20-day exponential moving average is placed. Last 2 days, we have been seeing Bank Nifty struggling around this area, so this level now becomes very important to cross and sustain on the upside. So any move above 44,600 would lead to the banking index continue its momentum up to 44,850 44,900 on the upside. And in case 44,200 is taken out in due to any acceleration of selling pressure for the day, then the next important levels would be 44,000 and 43,900 on the downside. Now, friends, let us see which stocks and sectors are looking positive from here on. Yesterday, positive chart setup was visible in AMC names such as HDFC AMC and Nippon AMC. Even names such as CDSL and CAMS were in action, and we feel they are looking good positionally from here on also. Stock specific action was visible in CPSE names such as Coal India, NMDC, GAIL, NALCO, and we feel all these stocks could do positionally well from here on, despite the markets being in some kind of a weakish environment. Apart from these, auto names such as TVS Motors and Maruti saw some decent long build up on the upside. Now, from the mid-cap space, we feel that the entire media sector, including Sun TV, has seen some real good action yesterday, and the daily as well as the weekly chart setup looks very promising from here on also. So now coming to the FII data, FIIs have been net sellers in the cash segment to the tune of 1800 crores, while DIIs supported the markets being buyers to the tune of more than 1500 crores. FII's long short ratio for index futures is still weaker around 28%, and yesterday they squared off some 3150 existing short index futures positions. In the stock futures segment, FIIs have sold off closer to 16,800 contracts. Coming to the index options, FIIs have squared off 56,200 contracts of call options, which is around 18% of their existing net call longs, and they've even squared off 46,000 contracts of index puts, which is closely 12% of their existing long positions in index puts. So just to summarize, we feel that the indices could stabilize post the initial knee-jerk reaction due to the Infosys result reaction and possibly some kind of selling pressure into the IT names. And going forward, the key support level for the Nifty for the day could be around 19,600, 19,620 on the downside, and resistance could be around 19,830 to 19,850 on the upside. While for the Bank Nifty, key support zone could be around 44,200 to 44,250, and the resistance, the first resistance for the day could be around 44,600, where the 20-day exponential moving average is placed. And once that is crossed, the next levels to watch out for would be 44,850, 44,900 on the upside. So friends, that's all for the day. Thank you all for regularly listening to the podcast and wishing you an energetic day ahead. Do tune in tomorrow for more market related updates and insights. Thank you all.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.